The silence was deafening. For days, the only sound was the hum of computers and the whisper of algorithms. Then it happened. A trickle of news alerts turned into a deluge. And before anyone could react, the world was thrown into turmoil. It started with a single missile, and within hours, the world changed. News broke across every screen. Iran and Israel were officially at war, targeting not just Hamas, but Iran-backed militias in Syria and Yemen. Iran retaliates with ballistic missiles. The stakes are rising. It reacts. Was this a flash crash or the start of something worse? Would the fighting escalate? Could it spread beyond the Middle East? Crypto being the largely unregulated space that it is, there were no easy solutions, no matter how decentralized or resistant to censorship it claims to be. Crypto prices react to the same fears and uncertainties that drive traditional markets. Secondly, transparency and trust are paramount. In times of crisis, investors seek clarity. Lack of information only fuels panic and speculation. Thirdly, diversification is crucial. First, stay informed. Keep up with reputable news sources to understand the latest developments and their potential impact on the markets. Diversify your investments. Reading financial statements and knowing your investment strategy can help you make more informed choices. Don't put all your eggs in one basket. The conflict in the Middle East is not just a financial story. It's a human story filled with suffering and loss. Our thoughts go out to everyone affected by this conflict. As we wrap up, let's leave you with this. In the world of crypto, resilience and adaptability are key. Stay informed, stay diversified, and stay level-headed. And remember, even in the darkest times, there is always light at the end of the tunnel. Explore investments across different sectors and asset classes to spread risk. Have a contingency plan. Think about your financial goals, your risk tolerance, and your investment strategy. Having a plan can provide clarity when emotions are running high. Consider dollar cost averaging. This strategy involves investing in regular intervals, regardless of market conditions. It can help you buy low and potentially weather any short-term volatility. And finally, don't panic. Easier said than done, but selling in a panic often locks in losses. Stay calm, assess the situation rationally, and make informed decisions. Remember, staying level-headed can be the best strategy during turbulent times. Whether you're talking about investment portfolios or even exchanges, having multiple options can help mitigate risks. And finally, preparation is key. Staying informed, having contingency plans, and understanding your own risk tolerance can make a world of difference in turbulent times. Exchanges saw record withdrawal requests. Decentralized finance platforms prepared for potential liquidations, and investors turned to social media for guidance. But amidst the chaos, a new reality was dawning. Geopolitical events were no longer distant headlines for crypto. They were at our doorstep. The war was reshaping the digital landscape, and we were in the eye of the storm. Would there be more attacks? Each hour brought new data, new analysis, and fresh fears. Traditional markets were also taking a beating. Oil prices shot up. Just as it has recovered from past shocks, it will likely bounce back from this one too. However, this event serves as a stark reminder that in the world of decentralized finance, centralized risks still apply. Energy supplies seem threatened and global economies braced for impact. In this atmosphere of what-ifs, investors took cover. They pulled their assets, they hedged their bets, and they watched nervously. Here's what we saw happen during those crucial hours and days. First, a crash. We've seen this before, right? Sudden sell pressure. Prices dropping. Investors spooked. But this crash was different. It wasn't triggered by a tweet or a regulatory change. This was pure geopolitics. Within minutes, Bitcoin plummeted below $26,000, its lowest price since early 2023. Ethereum followed, dropping nearly 30%. Stable coins even felt the tremors, with USDT and USDC briefly losing their $1 tethers. But it didn't stop there. Smaller altcoins weren't spared either. Dogecoin, Shiba Inu and Cardano all saw double-digit percentage drops in a single day. Markets plunged into turmoil. It's no longer about immediate responses. This has become a full-blown conflict, with each side vowing retaliation. And as the attacks intensify, so do their reach. Civilian infrastructure is targeted, supply chains are disrupted, and even the global economy feels the impact. Energy prices surge as oil facilities come under fire. Shipping routes through the Strait of Hormuz face threats. Global trade trembles, and as these attacks spread, so does the fallout. Markets plummet, volatility spikes, and investors scramble for safety. Airstrikes, retaliations, oil fields burning in the Gulf, and military posturing across the Middle East. The conflict wasn't just regional anymore, it had global consequences. As missiles lit up the skies over Tel Aviv and Tehran, panic rippled through the world markets, and nowhere did it hit harder or faster than in crypto. Within minutes, Bitcoin tanked, Ethereum followed. Stable coins shook under pressure, and altcoins bled red across the board. Billions of dollars vanished in the blink of an eye. Fear, uncertainty, and doubt, what traders call FUD, gripped the digital financial world like a vice. And for many, it felt like 2022 all over again, only worse. But why? Why did everything start crashing so fast? How did this black swan event spook crypto's most seasoned investors? And how did the lines between digital assets and physical conflicts become so blurred? Traders scanned charts, miners crunched hashes, and developers coded new dApps. Then, out of the blue, Israel came under attack. Hamas, a group backed by Iran, launched rockets into Israeli territory. The death toll rose, tensions flared, and soon enough, Israel responded with airstrikes. This wasn't your typical border skirmish. This felt different, larger, deadlier. As the dust settled, two things became clear. This war wouldn't be confined to headlines, and there was more to come. To understand what happened, we have to go back to the beginning. Because this isn't just a story of Bitcoin dropping to 5K or Ethereum falling to 1500. It is about how an invisible line was crossed, a new paradigm established, and perhaps even a warning for the future. But before we dive into this rabbit hole, here's a little background on this ongoing situation. October kicked off with everything seemingly business as usual. Fast forward to October, and we see the attacks evolving. Israel intensifies airstrikes against Iran. In this climate of fear and uncertainty, the digital asset market doesn't stand apart. Then came the second wave, the uncertainty. No one knew how bad it would get. Finally, the third phase emerged, the questions. What should we do? How do we navigate this? Where do we turn for answers? So, what does this mean for us going forward? Well, a few key takeaways stand out. Firstly, crypto is not immune to global events. As we navigate this evolving situation, it's important to remember that while crypto might be volatile, it's also resilient. Now let's talk about what you can do to protect yourself in this environment. And remember, knowledge is power. Understanding how markets work, looking ahead, it's important to acknowledge that this is a complex, evolving situation with far-reaching implications.